Welcome to Java with me. Thank you kindly for joining. It's July 16th, 2025. It is also Wednesday, which means it is Discord Day. We'll have a discussion this evening open on the Discord server, 5 p.m. Eastern Time. And this is where you will find a bit of market news, a little bit of outside news, peppered with a little bit of nuance here. So this latest one, to serve the man. Now, some of you will recognize this from Twilight Zone days, but this is in reference to compulsory service as far as expanding what the United States would call the draft. So we've got PPI coming in, and let's get started as always with the markets. Now, fear grade meter did drop slightly, but we're still high range grade territory. This is showing a bit of a ranging and a little bit of a drift. So let's cover a little bit more of what is driving the markets this morning. They're quite level. We are getting bank earnings, which will also have an effect as well. So 10-year yield right about 4.478. So coming back to that 4.5 level and showing that it could be actually rising again. So all of this discussion about the rates, the market will determine how things go. So with this, if this drops, this shows more money going into bonds. If it starts increasing, we could watch a shift in this currency. Now, relative strength of the dollar also down. This is in relation to other currencies, and a lot of this is due to the economic tariff war that is still going on. Now, cryptocurrencies, we've got some legislation going through this week. Bitcoin holding above 118,000, dropped down to, I believe it was 116 yesterday, and Ethereum having actually better gains this morning, but still holding it. So we're watching it at these levels to see where it confirms whether it's going to continue, gather strength, or whether it might actually break down. So with this, we've got the stock markets kind of really just kind of grinding right now and waiting for some news. Go over that a little bit more. Futures kind of agree with that same thing. We're watching gold is up slightly, but nothing significant really. Oil as well, still hovering. So the market really is in a cautionary hold, wait and see as far as this morning now. This could change because it's still very headline driven. So right now, I'm putting an issuance of caution, a little bit more than buy the dip. Although yesterday, with the bank earnings, we did watch some movement on that. Banks are doing very well. So PPI stands for Producer Price Index. Talk about that in a bit. Now, CapEx. This is capital expenditures. This means larger corporations, what they are purchasing to grow their companies. And they were surprised to the upside that this grew, which is really ridiculous. So what happened was, in anticipation of massive inflation due to tariffs or otherwise, corporations opened up and tried to pre-purchase and load it up. So they're preparing. This is a bit of looking forward. Now, the problem with this is this has given a bit of a boost temporarily, but it's going to level out, which means it must be lower than expected once they have enough to be at their levels. Now, yesterday we did get the CPI calculations and PPI. So with these, came in as they expected, inflation continuing. However, they've got massively manipulated numbers. If something is skewing the index, they will just take that item out. They strip out things you need, such as food and energy. So if you don't notice, your food or your energy, if those go up, they're not going to be calculated in. So for true inflation numbers, I've got a couple of indices here that I prefer to look at for a little bit more reliable data. So the first one is Shadow Stats. Now, you do have to have a subscription for them, but I do actually pass on a lot of the information. And then also, I posted this before. It's a little bit more of a learning curve, but Chapwood Index. So if you care to take a look at either of those to see the real inflation, if you don't believe what's going on with what you're having to spend, Now we've got more warnings coming out of this bond market, very unstable. And when I reference this, it's not just United States, but foreign bond markets as well. In particular, the Japanese bond market is a serious issue right now, flashing major warnings. And if they dump again, this could really be a trouble. So, negotiations going on right now with them, depending on whether they get a deal, could really affect our market back at the United States as well as globally now. They've got elections going on this week, as well as Treasury Secretary Bessent is on a trip over there at the moment. So yesterday we did hear from JP Morgan Chase, JP Morgan. We heard from Citibank, and they had massive bank earnings, and this was on trading. So all of this retail, all of the buying the dip, all of the juicing and the easy money flooding into the stock markets really floated these banks. Now, we're getting a warning from ASML as a chip manufacturer. They've got lower guidance going forward. And as a large portion of this rally has been tech driven, artificial intelligence, and chip driven, this is something to take into account. I'll go over some individual stocks in a bit. Now, they're also watching the Fed chair race. There's a few in the race to become the next Fed chair. However, they're putting everything on Hassett in the media. I'm still thinking it's going to be Waller. I think he's got for a few reasons I won't go into here. We can discuss it tonight if anyone would like to. Anyway, I think Waller would be the front runner and really has the deep chance with this. We've also got the Fed cuts are on board. They're watching the inflation for this now. If inflation is really hot, it's going to tank the markets because they don't believe the Fed will cut. They're not going to cut in July. They, I believe, will cut in September. Now, we've got a lot. This is a war economy, and we'll talk a little bit more about this. But in a war economy, you can tell this from gold, the volatility index, which is the fear index, oil, how it moves, but it's also a tendency toward whether a particular Middle East or Russian is involved because they're large producers of the oil, as well as Dixie, which is the relative dollar strength. Now, the urgency is to get into what they're calling PPAs now, policy making protest assets. And they call it this because it's outside, for the most part, of the control of policymakers, less subject to it. And it's just a fancy way, really, of saying like gold, precious metals, and Bitcoin. So calendar, we are getting core PPI prior to the market open. This could cause a major shift. So we're watching that. As I said, if it's really, really hot, could tank the markets. If it's right above, then that would be good for the markets. If it's really low, also not good for the markets. So we are getting these numbers, and then also Fed Beige Book later, and some jobless claims prior to market open tomorrow. So get your trade set up. So market shifts today. More bank earnings. Bank of America, Goldman Sachs, and Morgan Stanley report today. I believe was Morgan Stanley came in with really good earnings again on trading. Now, they make loans. They're in the business making loans. They're talking about how good these are. The problem with loans is they're good, really good. You're getting interest until they go bad and you get nothing. You don't get your principal or your interest. So this is a lagging indicator of how the consumers are doing. And at the moment, we're watching auto loans are becoming delinquent by massive numbers. Now, Baidu is teaming up with Uber, so their stock is up. GPN on global payments. This is a shift in the cryptocurrencies, stable coins, global payments network going to digital. We've got DPro. Now, this company is Dragonfly. They produce drones, and they just got a massive Department of Defense contracts, of course, up. They're saying India, China, and Brazil could face consequences for still purchasing with Russia. This is kind of an external additional tariff they'll be facing if they continue to do business. Now we had Fed's Bar warning of buy now, pay later loans, the short term ones, saying it's a debt trap. So he's correcting that, but he's saying that it's likely a sign consumers don't understand the terms of the emerging credit offer. They understand this. People are hurting so badly and don't have money. They're using it anyway, understanding the terms and thinking they won't pay it later because there's no recourse. So, Bar, I don't think you're correct on that one, and I think it's going to bite in the long run. So, back to the loans. Housing market sending a stark warning to the United States economy. This is year over year change serious mortgage delinquency. So, the lighter the color, the deeper in debt and trouble they are. So the darker the purple, the better off they are. And you can see there's particular areas. So real estate will be definitely locational. These are where you're going to see your bargains in your real estate if that's what you're looking to purchase. Now, according to Trading Economics, US mortgage applications sank at a very significant rate. Now, we've also got it's not just the mortgages or the rate, but home insurance costs are now so much that people can no longer pay their mortgages, adding property taxes to these, or if they also have HOA fees, this will tank it. It will tank the market. And I'm voting for a recession. And I say this not because I'm cold hearted or that I want people to suffer. But at this point in time, there are two choices because a third, which is producing out of it with the GDP, I think is not a viable option. They've proven they're not going to do that, and the debt will exceed this no matter what. So production is not an option, which is the top option. So now we've got a choice between two. One is recession, the other is war. So I'm voting personally for a recession because war will be truly hideous. Now, here again, Bloomberg slow down Europe's cocoa factories highlights how historically high prices are hitting the chocolate industry. So, while I love chocolate, the larger story in this is once prices hit a point, people stop purchasing, and that causes the deflation spiral to start. So, we'll watch these prices come down, but not without pain. So, this spiral, I believe, is going to start probably pretty soon. We're heading into August, and that could be the very definite beginning of this. I could be totally wrong. This is just what it looks like. Probabilities are beginning to favor this, despite what a lot of the large mainstream media and higher economists that are very vocal are saying. So, yes, there could be a melt up, but I think it will be brief. I believe we're kind of in that melt up now, but it's going to end very rapidly. So we've got back to the war front because right now we really do have a war economy. We're getting more Starlink satellites now. Right now they're for internet, but they're also a multiple purpose, if you will. If you can't catch that, we can talk about this later in the Discord discussion. We've got Israel did strike uh, overnight for the United States the Syrian military headquarters in Damascus. Now, this was because they said they violated the ceasefire. So, this is going to continue on. More about this going on, more weapons to Ukraine. Now, we're watching a shift in sentiment. NATO countries beginning to refuse to transfer the US weapons, and then also because they don't want to pay for them. But there's more to this. This is a list of the countries. But the other side of this, if you will, is because no one wants to go along with this forced conscription that might be coming in. So, as we watch this sentiment shift, we're going to see if they actually push back in any meaningful way. So, with all of this, I wish you a wonderful day. I'll be on Discord if anyone would like to join us. I can put out link a little bit later and or ask for one in the comments. If you would please. Thank you kindly. I hope you have a wonderful day. And until I see you again, my friends, resist.